Thank you for joining us again. You're still watching Business Breakfast on iBrandTV. Now, the latest data from the United States Bureau of Labor Statistics reveal the inflation rate of the world's largest economy hit a new 40-year high of 9.1%. This comes as a shock to analysts globally who had expected inflation to moderate at about 8.8% or below 9% at the least. At 9.1% pressure is heavy on the U.S. Federal Reserve Fed to act swiftly and more aggressively. With this, analysts expect the United States Fed to increase their benchmark interest rate by over 100 basis points or 1%. This has mega ramifications for emerging market economies, especially Nigeria, if it does increase interest rate as predicted by as much as 1%. Recall last June, the U.S. Fed reacted to high inflation rate data by increasing its interest rate by a whopping 0.75%, the highest rate increase since 1994. The interest rate is now between 1.5% and 1.7%. Now, for further analysis on this, Yusuf Ogunbiyi is head product structuring and origination at Apex Nigeria. He joins us now via Zoom. Thank you so much for joining us, Mr. Ogunbiyi.
Nice to be here again. Good morning, and good morning to the listeners.
Good morning to you. Now, at 9.1% inflation rate, the United States has just recorded a new 40-year high. What does this mean for the United States, considering its status as the world's largest economy?
Yeah, it's interesting times that we are in currently. New 40-year figures being printed in the United States. So if you look at the CPI, which is what has been printed now, the Consumer Price Index, at 9.1%, I'm not sure anybody in this lifetime, anybody that has joined the workforce post 40 years ago has ever experienced something like this. So it's a new scenario for everybody to play around. But then, if you look at how it will be affecting the United States, you are looking at probably three ways that it could affect the United States. The first one is the most direct, which is the reaction of the Fed, which has a meeting in July. And the question is, by how much will they raise the interest rate? Will they go 75%? Will they go 50%, which is the least? 0.5%, which is the least expected? Or they do the moderate 0.75%? Or they go as high as 1% increase on the benchmark interest rates. So this means that it could go as high as 1%. The second thing, as a result of that, the consequence of that is that now analysts are now begin to fear that if the Fed continues its aggressive hikes, there's a stronger likelihood that the United States will fall into a recession. And if the country falls into a recession, it would very much affect the everyday man on the street, the factory workers, the blue-collar jobs, and you see a lot more layoffs and the likes that follow, those kind of things that follow a recession. So that's the second mechanism. The third one is the increased strength of the dollar. Okay. So the dollar has been increasing, as it has been rallying strongly over the course of the year. At some point yesterday, we saw the euro-dollar parity, which means that €1 to $1, which we had not seen for the past 20 years. And we think that if the Fed continues to hike its interest rates, there's a stronger likelihood that the dollar will continue to rally. All other currencies, the euro, the pound, the yen, will continue to fall against the dollar. So three mechanisms, basically. The first one is that the Fed would either hike by 75 basis points or 100 basis points. Second thing is, if they continue the aggressive rate hikes, there's a likelihood of a recession in the United States. And the third one is that the dollar is likely to continue to rally over the course of the year.
But we see a similar trend, of course, happen in the United Kingdom. They also recorded a 40-year hike in their inflation rates to about 9% also. Do you see any relationship here?
Yeah. Inflation is a global phenomenon as it stands now. Every country in the world is facing an inflation problem. And if we were to draw a chart of the global central banks globally, looking at how much they've hiked their interest rates during the course of 2022, you would see that pretty much everybody, save for a few countries, are already responding to higher inflation rates in their country. So inflation is a global phenomenon, and that's as a result of the significant rally we've seen in energy prices, whether it's crude oil or gas. And gas is very critical to Europe and the UK as well. We also see significant rally in food prices generally, and these are the two most important consumption means of consumption. Items are consumed by consumers generally. So you either pay a lot for energy, you pay a lot for food, and these things have increased dramatically over the course of 2021 and 2022. So
Mm.
as it stands now, every country in the world is faced with an inflation problem.
Mm.
We saw what happened in Sri Lanka over the past 1 week, where the president and prime minister have had to resign
Escape.
because there's been escape and then resign
Mm.
um, because of the massive rally in prices in Sri Lanka. So it's a global phenomenon. We are also facing it in Nigeria, and it's
Exactly.
likely to
Bringing it
continue.
home now, what impact will this have on the Nigerian economy?
Interesting question, honestly. The first thing that would happen is that
All right, Yusuf Ogunbi there talking to us about the interest rate or the inflation rate in the United States, which of course we see in other countries like the United Kingdom, which also recorded inflation rate hike. That was in May 2022. They recorded about 9.1% inflation rate. And of course, we're seeing the trend in different countries. But now let's look at the impact it will have on the Nigerian economy, looking at the fact that we are majorly an import-based economy, and we have to depend on these international countries or these, international economies to get some of the products that we make use of in Nigeria. We'll be assessing all of this impact with Yusuf Ogumbi as soon as we're able to establish a connection. Thank you for joining us again, Mr. Ogumbi.
Yeah, can you hear me now?
Yes, I can. Please go ahead
Oh,
with your
fantastic.
thoughts.
So, like I said, there's what we call the foreign portfolio investments (FPI). Typically, it's called hot money. So it's the kind of money that looks for returns opportunities everywhere. And if the rates in the United States and generally in the developed economies are going up, then there's no incentive. There's little to no incentive to look at emerging economies or frontier economies like Nigeria. So that's the first thing. The second one is that there would definitely be imported inflation because we import a lot of things in the country, and no doubt you are importing from a country that already has a high inflationary environment. You are basically exposed to the same thing. So imported inflation is something we should be expecting. And I think our inflation numbers in Nigeria are already reflecting that. So if you look at the core inflation figures, you would already see imported inflation being reflected. The question is, how long do we expect this to last? And I don't think anybody can say for certain, but the 3 to 6 month expectation is that this will continue over the course of the next 3 to 6 months.
But the world is already grappling with some sort of, strong dollar that saw the euro trade at parity to the greenback for the first time. For the first time in about 20 years. And then we see this hike also driving interest rates in the United States, forcing investors to flee other currencies in exchange for the dollars. But how do you think Nigeria can deal with this inflation pressure?
So I think a few things are possible. First of all, we need to understand that this inflation is not just a demand problem. It's not just a case where there's a lot of demand, but also a case where there is the supply chain constraints are still very much there, and the supply side is still grappling with meeting up with the demand. So on the one hand, you have a lot of people that have money on their hands. On the other hand, you have supply that is not meeting up with the demand in any way, shape, or form. So in Nigeria, I think one of the very quick wins that we could have is to have a clear sense of food production. We are still within that window, and we've already emphasized it a number of times that food is critical. It occupies about 51% of our inflation basket, and we need to have a sense of how much to tame that actually. So by November, December, we begin to see the effects of all of this in food prices coming up strongly. So that's one. There are a number of other things. Yeah, the CBN could try to impose its own monetary powers by increasing the MPR and trying to manage liquidity within the system, which is also
But has
possible.
that,
The question is,
sorry to butt in, has that ever worked, increasing the
so
monetary
that,
policy
that
rate?
that's where I'm going to actually. The question is, to what extent will that actually affect the impact, the inflationary environment that we are faced with? So it then boils back to having a clear sense, or having a lot of interventions in the food production value chain. The other thing that we also need to pay attention to is the energy crisis that we are faced with in the country. There's still a lot of queues at filling stations. Diesel is still quite expensive. I was listening to your previous speaker, and he mentioned the case of diesel. If businesses are having to spend so much on energy, they would basically just transfer the cost to consumers, and that would reflect in our inflation numbers. So if we can, as much as possible, implement policies that would tame these energy and food price rally that we are faced with within the country, unfortunately, which is expected to go on further over the course of the year. If we can implement policies, adequate policies that will address these two things, I think we would be able to bring down the inflation a bit. And that's accounting for the fact that there will still be imported inflation, whether we like it or not.
Well, Turkey, the EU, and the US are some of the countries we also expect imported inflation from. And one would begin to wonder if this isn't time for Nigeria to start working hard to transform the economy and look at reducing foreign importation and, boosting local production.
Yeah, it's interesting that, can you hear me?
Yes, please go ahead.
Yeah, it's interesting that analysts, notwithstanding the fact that we say we import a lot, analysts believe that it's a case of we not exporting enough, right? So it's our
Ah.
production and productive capabilities that have declined significantly. And because we've enjoyed oil money for a long time, we didn't know the impact of how much we've lost on exporting other items that we could export. But then you would understand Nigeria is in a structural problem. Power is not something that we can boast of. And if you don't have power, how do you then power the industries? I'm not sure how you can do that. Um, as it stands now, Nigeria still imports a huge chunk of the energy items that it consumes, energy commodity it consumes. So you're talking about crude oil, fuel, PMS actually. You're talking about diesel, all of these things. In fact, we import some element of gas, notwithstanding the fact that we have the largest proven gas reserves in Africa. So the question is structural. How much of these industries are we implementing the right policies to drive? So come to think of it, Nigeria has all of these items. Gas prices have rallied so much, but yet we are not enjoying the benefits. And that's because we can't export as much as we should be exporting. So what policies are we implementing to ramp up industrialization in the country? I think that's the greatest focus. And as we go into the electionary year, 2023, I think that's a very significant thing we should all focus on. How much policies are we implementing to industrialize the country? We have the resources, we have the manpower. How much of it do we intend to actually bring to move from the position of potential into actual production? If we can do that conveniently, I'm not sure. I don't think we should. Yeah, we should be concerned about importation. Yeah, we should try to substitute as much as possible. But I think it's more of how much export can we ramp up, and in a situation where the world needs what we have, what we can export, how much of these industries can we bring to limelight? That's the greatest problem for me.
But do you see any of these possibilities happening in the nearest, time?
Unfortunately, we don't see any. Honestly, unfortunately, and I don't want. I think your last speaker said this at the end of his statement, but then I'd sincerely hate to be the pessimist or the one that sounds the alarm bells. But then there isn't any policy that seems to be working in bringing these industries to their full potential. And it's very concerning. The interesting thing, Bolani, is that if you swap imports and you don't have what to replace it with, you will just increase prices. That's it. We saw that happen with rice, right?
But
August
don't we
2020,
have, sorry to
importation of rice,
interrupt,
right?
but don't
And
we
we saw
have
how
the
much rice
products?
prices rallied during that period. So if you swap import, you placing policies to stop imports, and you don't replace it with production within the country, you are just giving opportunity um for speculators to make so much money from that kind of scenario. And it's the everyday man on the street that will lose at the end of the day.
Yes, so I was going to ask if we have the export products or the products that are exportable, or is it a problem of having them up to standard, up to the international standard for them to be exportable?
We have the items that can be exported. Yeah, we still have the standardization challenges here and there, but have we even used up? We've not even used up to 50% of the potential we have in terms of exporting these things. So it's, yeah, partly the case of us trying to standardize what we are doing, but then I think it's more of us not even being able to produce as much as we should be producing. The ports is another challenge. Imagine you trying to develop your economy by exports, and then your seaport is not functional. It's dysfunctional.
You know, recently the Lekki seaport was launched and they received its first delivery, and one would expect that that should boost some form of
Yeah,
international trade, shouldn't it?
yeah, yeah. It should. It should. As long as the challenges surrounding piracy and the likes do not cross over to that axis, I'm sure. So the what is it called? The stagnation that we see in the current shipping ports, the Tinkan and the Apapa ports, we shouldn't be experiencing that in Lekki, right? Given that it's new and you wouldn't have those kind of delays
And
in
the
that port.
congestion.
But then the congestion, you wouldn't have those kind of congestions there. But then the piracy still stands. So the security has to be there, the infrastructure has to be functional, and then you would see Nigeria is the largest consumer market in Africa. Everybody wants to be in this market. The
But,
question is, are we implementing the right policies for them to come here?
well, some analysts have suggested that it would be wise for the government to turn dollar-based investment or anything that can earn us some form of income in foreign currency. What would you say about that?
It's smart. It's a smart move if we can get it sorted, right? And I think that was the major selling point for a number of agro commodities that could be exported. Gas is another option. A number of solid minerals that can be exported out of the country. So that's the selling point. Foreign exchange, critical for the country, and we need to ramp it up. We've not been having the kind of foreign exchange reserves that we used to have, that used to go in the excess of 44, 45 billion dollars. I think we are still around sub 40 or 40 billion dollars as it stands. But then demand for foreign exchange continue to rise in the country. So we need as much as possible, as many opportunities as possible to ramp up opportunities to bring in foreign exchange into the country.
So what are your predictions for the days to come? We know that the campaigns are on, dollars are exchanging hands, and of course it's affecting the economy, the dollar economy. What are your predictions for the days to come as we approach 2023 elections?
Yeah, it would be nice to put your money in investments that protects you from both inflation and foreign exchange devaluations. It would be nice to be watchful of the naira dollar exchange rates and take decisions as appropriate as individuals. And also it would be nice to pay attention to inflationary environment. So you are also watchful of those things so it's you rearranging your budget, it's you trying to make sure that you're saving in the most optimal way and ensuring that you are getting your savings done appropriately. But then at this point, I think it's an environment where everybody must be very conscious of the actions they take and not lose money unnecessarily.
Oh, well, that's a fine place to leave it. Thank you so much for your thoughts on the show this morning. Yusuf Ogunbiyi, Head, Product Structuring and Origination at Apex Nigeria. Thank you for your time on Business Breakfast.
Thank you for having me.
All right, have a good day. Bye. Yes, we've been talking about the U.S. inflation rate and the impact it will have, especially on the Nigerian economy. We'll take a break now. When we come back, the Infrastructure Concession Regulatory Commission, ICRC, is planning to gazette 53 eligible and bankable public-private partnership projects valued at $22 billion in 2022. Well, that's our next talking point, and that's after this break. We'll be right back.